morning, everybody. It's Brian Noble here with our weekly update for the S&P, Nasdaq, Dow, and the Euro dollar. Just recapping what happened last week. I was mentioning how important the 50-day moving average is for the three averages. We certainly tested that twice during the week. Soon after I posted last Tuesday, we had a severe meltdown in the US indices. They hit the 50-day moving average and bounced off. As you can see here on the Nasdaq, that's been the weakest market all week. It's led the move down. The 50-day moving average is coming in. It's kind of rising, as you can see. This channel here, it's up now at 11,150. Late on Friday, we hit a price just below 11,000, got down into the 10.9s, and then we had a nice little rally into the close, and then we gapped open yesterday, and that market was rallied to close at 11,277. The important thing to remember when you've got a week like this, you've got the FOMC meeting. They're very clever, the Fed. They have the FOMC meeting on the same week as the quadruple expiration. So quadruple expiration is all the options and futures contracts for the September front month, which will all expire on Friday. And they tend to be positive. Against that, we have the equinox next Tuesday, which can also lead to a lot of volatility. So I'm expecting heightened volatility from the FOMC statement tomorrow. We've got the Powell press conference soon after. So at London time, the FOMC statement will be released at 7 p.m. and then 7:30 we'll have the Powell press conference. If the market does sell off on the back of Powell for whatever reason, I wouldn't be chasing the market lower, because with the expiration, as we saw in the June contract, when we had the same. These markets tend to be upward expiring, and I would expect the market to rally into Friday and then resume its downtrend next week. As I said, we've had two good tests of the 50-day moving average across the board. I'll just bring up the S&P here, and each time we've had a 100-point rally off it. So you tend to get the third or fourth time that we test, we tend to break, and if we do break the 50-day moving average for the S&P, which is now risen to 33.26. I would expect us to go down and test the 200-day moving average over the coming weeks. Bear in mind, we're in the week period for equity markets from now until the mid-October, and then at that stage we should be fairly much clearer as to when a vaccine is going to be available. Trump is going to do everything in his power to release a vaccine before the election on November the 3rd to get the maximum political impact, and don't underestimate that. How the FAA are going to approve that at the time, we don't know, but we can deal with if and when that happens at the time. But as I said, on Friday, the S&P got down to the low at 33.08, and then we rallied back above 3,400 yesterday. So similar again, I think from Friday, Chicago low and our close was 33.40. The low intraday low yesterday was 33.65. So we have a huge gap in the S&P at 25 points. I'm going to be a buyer today of this market between 33.45 to 33.60 with a 29 stop and a take profit of back up again around the 33.90. And I'm also a seller. We've got resistance at 34.20. I'd be a seller into that resistance, looking for not for a huge move lower, just ahead of the FOMC tomorrow. So maybe 20-25 point move and then back, and then the market should go and hold until we get the Powell press conference. Just moving over to the Dow, which has been the strongest of the markets all week. Again, the Dow tested its 50-day moving average at 27,300 on Friday, bounced off it aggressively, and we're back trading above 28,000 this morning. Again, I don't mind selling the S&P and the Nasdaq. I wouldn't be short the Dow. As you can see, it's a nice rising trend here. So the Dow really needs to break this 50-day moving average before we can look for lower prices. And as you can see, the 200-day moving average comes way in below at 26,300. Sorry, I'm just moving over to currencies now. We were talking about the euro dollar. I thought at last Thursday's ECB press conference with President Lagarde that she would talk the euro down, but she didn't, and the euro made a rebound high of 119.18 before selling off into the close after the equity markets sold off. But the euro has got a bit of a bid again over the last couple of days, even though it's traded in a very narrow range. But we saw ECB member Lane coming out again yesterday saying that the euro is bad. that we need to, get the euro lower again. So for the first time, we're probably in the ECB, we're seeing different comments from different members, which is unusual. Against that, the DAX is not really setting off on the back of the higher euro, which is unusual. And as I said last week, as long as the 50-day moving average can hold in the euro dollar, then this euro will be a buy on dips. The 50-day moving average has now moved up to 117.03. It's probably increasing by 6 to 7 points a day. So, 117 to 117.50 will be very strong support. The euro, I've been aggressive buyer there with a 116.70 stop. So, it's a good risk reward, looking for a move back up to the 118.50. If we can take out the early September high at 120, then we can certainly go back up to 122, 123 over the coming months. But I think if the euro does break and close over 120, then you're going to see a lot of verbal intervention from ECB members trying to get the euro back below 120. Remember, in this day and age, nobody wants a strong currency because, to help the growth and the exports, especially after the COVID crisis. Thank you very much for listening to me. If you have any questions, please email me and I'll talk to you next week.